Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It is September 4th. We start a new month today, and there was a lot of volume today, a lot of movement, but there really were not a lot of setups today. You had to be real patient today, and there weren't a lot of really good setups. Um, Prices really were sideways, really from the open to the close. This is a sideways. I mean, the support's down here around 2886, and the resistance is around 20. I just call it 2900. So we're still testing the 2900. Now we're underneath, can't seem to get back through it. Where we were above it for a couple of days, we seem to be back below it. So um, yeah, just there, this was just not an easy day. Mostly you would want to look for shorts off these highs, and it wasn't real consistent. So you really had to wait on. You had a the good thing was you had a trend down, trend up, trend down, trend up, and so as long as you stayed with the trend, you probably did okay. But even then, there weren't a lot of setups. So in the end, there's enough trades here to find plenty of trades, but you just had to be kind of patient because there were stretches where you just had to sit there and wait. And my saying is always, no trade is better than a losing trade. So anytime you aren't sure, anytime you're not 100% sure you're reading it properly, just sit tight and don't do anything. And eventually it'll clear up. Eventually you'll start figuring out that it's trending lower here, and then eventually you'll figure out it's trending higher here. And the target is probably back to the highs when it's going up and back to the lows when it's going down. It's pretty simple. Although it wasn't easy to find a lot of these trades, so it just wasn't real clear. But once it was pretty obvious, the problem here is that if you look across here, it's not consistently in the same place. First it was around, this is around 2898, and then it moved up to around 2900, and then it moved up to around 2901, and down here it was 2892, then it dropped down to around 2888, and then down here to 2886 or so, and then over here 2885. I mean, they're not consistent, even though it's finding support somewhere in that same general area and bouncing and finding resistance in the same general area and turning down. It's not doing it at a consistent spot. When it's consistently off the same highs and consistently off the same lows, it makes it real easy. But when it's not consistently, but it's somewhere just in that area, you really need to make sure it's going the other direction. You need reversal patterns and failures and things like that to make sure that the move is over. And you really, for most traders, you're better off to wait until you get a confirmed trend in the other direction and looking for your target down in that same general kind of area. So hopefully that makes sense. I'm going to back out just a little bit. I wanted you to see the whole picture, but we can't. It's so much volume today, we'll have to back out and kind of work across the screen to get the bars pretty, big enough for everybody to see. So um, at 7 o'clock hour, we were bouncing here, and it looks like, we're kind of going sideways, and you end up getting a failed second entry short there after an overshoot. You actually have a close outside here, a move to a new low, a overshoot, and so you would kind of expect a reversal here. This is not a perfect reversal because there's a lot of sideways stuff right there, but notice there's a new low and you go short one time, you go short twice. And so you may consider going, I really want to make this green, but you're kind of expecting a reversal here. So I kind of like that trade. And this is a great example of why we scalp for 4 ticks, because you wouldn't have got one more tick than 4, and it never would have gone any higher, and you would have gotten stopped out. So that's a perfect example, because this one you really need 6 ticks to get out. So it has to move 6 ticks from the top of your signal bar. It moves 1 tick to enter you in the trade, and it has to move 4 ticks. It actually has to move 5 ticks to get you out, because it has to move through a limit order, and you can only exit on limit orders. So it has to move through a limit order to get you out. So that means you need 5 ticks to get out. So it takes 6 ticks. So hopefully that's clear to people, because sometimes that confuses people. They say, well, how do you get 4? They'll be trying to get out at 4 ticks, and it'll hit their limit order and not tick through it, and then they end up getting out with 2 or 3 ticks because it backs up a little bit before it goes higher. And so you got to exit with a limit order, first of all. And it has to tick through that order in most cases. Every now and then you'll get out on a limit order just hitting it, but most of the times it's going to have to tick through it. So you're going to have actually five ticks instead of 4 because it has to move through that limit order. So that's 5 ticks to get a 4-tick scalp. Again, occasionally you'll get lucky and get 4. It'll if you got your limit order in there early and you're early in the queue and there's enough volume, you might get out. I get out every so often, but all my orders are automated. As soon as my order is executed, my stop and exit go straight in, and I move my stop to where it's supposed to go. But my exit order will be there automatically. So I get in the queue early because I don't have to sit there and take time to make my 2 orders, because they're automatically put in for me. And so I think it's worth paying for having that automatic execution for you where it puts your orders in there automatically. And then whichever one, if my stop's filled first, it will automatically cancel my target order. And if my target order's filled, it'll automatically cancel my exit order. And that's a great idea too, because sometimes it'll run up and fill your order and then run back down. And if you're not quick enough to get it out of there, it might hit your stop again, and you might get entered back in the trade on the wrong direction. So I love that automated order stuff where all you do is click right, place your order, and then everything's automatic after that. If you don't get filled, just delete the order and reevaluate and start over again. So, but anyway, there's a failed second entry short there. It's not a perfect setup. It really could be green. It's real close, but I left this one blue. At the time, it got just enough, and then it comes back down. And when it comes back down, I'm a little bit less eager about this trade now. It's pretty obvious we're starting to go sideways, and you might have moved this down at that point to here. It still fits. It fits real. Earlier I had it up a little bit higher, but in the end I think it fits better right there. So I would have moved it down when it closed right there. And you get a real small bar, 2 or 3 ticks. I think there's 3 ticks there, and you got plenty of room to get out. So I like that one. You could argue for this one to be blue. Really, that's a double test of that level. So this one is, again, right there at the border. There's not much difference between these 2 trades. They could both be green. They could both be blue. They're just right there at just depends on how you saw the overall trade. The only problem was the EMA was still pointing down, and we're still below the EMA. We hadn't really pushed above it yet. It's obvious we're going sideways by this time, though. We come up. I actually liked going short here. I really thought we would take off again right here. You would have had to ride this back out, but let me explain to you why I like this. When we got this high here at the EMA, and then you get a 1 test, 2 test, and a big bearish bar. This is a double test. We're making lower lows every single time here. We made a double top, an equal double top, and then this is a lower high. So we're probably going to go lower. And I really thought we'd go lower here. I was wrong, but you wouldn't have got stopped out. This is why we put our stop where we put it. It would have been scary riding this all the way up and watching it bounce off where one more ticket would have stopped you out. But hey, that's why we put it where we put it. And somebody asked me that today. I always tell people, just take your trades, don't monkey with them. And you should be trading sim anyway. If you're trading live, maybe you exit this trade with what it gives you. But if you're sim trading, just take your trades, don't exit early, let them play out. And then the real work starts in the afternoon when you get through trading, when you go back and you study all your trades and you learn from them, you learn your tendencies and you correct them. And that's what makes you sitting here trading all day. It's helpful because you're getting screen time and you're watching prices print and you're learning as prices print. But the way you really get better is to study your trades at the end of the day and learn your tendencies and figure out what you did wrong, correct it, and try to do better the next time. We'll figure out what you did right and do more of that. And that's what really makes you better. Just sitting here trading. People think you can come in here and trade every day and get better. You're not going to get real better. What makes you better is this, the trading part of the day is just the start. And the real work starts at the end of the day when you go back and you study all these trades. And, I would suggest studying my chart, listening to the videos, making sure you understood why I like the trades, and then seeing if you can see it and figure it out yourself. People always say, oh, anybody can go mark the trades after the fact. Well, that's true. You can look where prices took off after the fact and mark them, but do you understand why they took off there? That's the key. And that's what I'm trying to help people learn is why that was a good place to enter. Not just that, hey, this was a good place to enter, but why was that a good place to enter? Do you understand that? Can you repeat that? And can you see it in real time? Probably not if you're new at this, but just make sure you understand it, and you'd be surprised, as you study and you take your trades and you study your trades and you get better, then you'll start to see, hey, you'll see a little move in real time. You'll say, hey, I noticed that, I saw that, it worked. And you'll see another one, and then you'll slowly get better and better, and you'll start to see this in real time more and more often. So keep that in mind. But by this trade, again, like I said, you could argue for this one to be blue if you got enough room to get out before here. Same thing. I really like this short, but again, by the time it bounces here the umpteenth time, it bounced here once, twice, 3 times, 4 times. We're in a range. We're probably going back to the high again. I really thought it would take off there. It didn't. Again, this is real borderline to be in blue. You could argue it to be either way. You could argue for both of those to be blue. They're real close, like I said. Comes back up. The only reason I don't like this for a short, we make another double top, a little lower one, and you can tell that's pretty consistent across there. The bar is not very bearish. It is a second entry because that low is a little bit lower than that one. So first entry, second entry. It is a second entry. It's a very bullish bar there. And this one's pretty bearish, but by the time that one closes, you're almost back down here. This bar is too big. So you might let it break low of that one and drop a limit order back here, see if it'd fill you. But I think that's too risky. Even though it takes off, it's just not really a good way to enter that. You got to let it go. And then we just kind of go sideways here. This one does turn down off what you would expect to be the trend line here. It's just too sideways. It's congestion. It's a little bit away from the EMA. It's right into this low. Not a good setup. It goes on down, but next time it won't. And, even though that took off and looks like it might have been a good setup, it's not worth taking. Same thing here. It didn't break higher. If it broke higher and you got a failed second entry short, maybe, and that's a fairly bearish bar. It opened down here, traded up a good bit, and it came all the way back down. That's not a good sign. And it is right off the trend line, but you're so far away from the EMA. You got to go short one tick into it, right into the low of the day. That's never a good idea. So you just kind of got to watch this. And then, of course, you get a first test of this little move up, a second test. So this is almost a little repeat pattern. Second entry short as well. First entry, second entry. It's not a perfect bar, but it's bearish enough. And that's a fairly easy scalp. And then notice that you got a break, you got a couple of legs down to a new low, and you get a little drop below there. You got a little bit of room back to the EMA. This is really looking like a range across here. We're probably going to come back to here at the minimum. So you may take that one. It's never a good idea to pick bottoms when you've got a big downtrend though. So that's why it's green. It's just, you're better off to look for the reversal pattern. And unfortunately, you don't get one here. That's why I like these little failed break lowers or failed break higher, because a lot of times that will be an important low of the day. And what do you know? This is an important low of the day. If you catch this one trade, you easily catch a runner here, and you can ride this all the way back up. And that's from 2887 or so all the way up to 2900, basically, before it really sold off. So, it's 12, 13 points off one runner. And you don't need but one or two of those to make a really good living at this. So, the scalps really make our money, and the gravy, the runners are our gravy. They really change the math for you. So, if you're just scalping, you got to be really good at this to make money on scalps only, although it can be done. But you catch one or two runners here and there, and you don't have to catch a lot, and it really changes the math for you. But anyway, that was a great entry. And then you come up, and it never breaks lower until here. So there's your failed first entry, and then this was your failed second entry right here. Your signal bar should really be right there. And so you got a failed second entry short there, right off That's the third touch of that trend line, key entry point. We're probably headed higher. You do get a possible overshoot, but it could be that that's just a midline in there, like so. It's hard to really know if there's a midline in there, but it could be. It fits pretty well. So when it bounces right off the key entry point with a failed second entry short, just take it, especially if everything else is lining up. And this looks like a nice reversal. And you're starting to get away from the EMA, so if you don't take this trade until you get a bigger correction, you probably don't want to take a trade anyway. And so you got to keep that in mind as well. So we'll call that a midline. I think it is. And we continue up. It's a quick, easy scalp, and you would have got a runner here most likely, and you could have ridden this up at least till you started to go sideways here. And basically, what that is, you run into resistance. Okay, had a slight interruption there, but yeah, you run up, you start going sideways here, and basically what you're doing is you're finding resistance where the former support was, but it pushes on through. So then you would look for it to test this side, and it actually breaks out. I didn't draw my lines across there, but if you put your lines across there, you could clearly see all that. And so you could have looked at this as a failed break higher, because it does fail. First this holds and it breaks out. And so you could treat that like let's just draw our lines across here. Not everybody can see this stuff. I really don't even I've done this so long, I don't even need the lines anymore, but it's always helpful to have them on there. But you can see the resistance across there and that little failed break higher. And notice how far away from the EMA you are. Generally, you want a lower high. Of course, you don't get one till here, and then you don't have much room back here to make a new low. So I was a little bit leery of that one. But when it tried a second time and failed, that's a failed second entry long. Just go short right there. And that technically you would have got a scalp, but I'd treat that as a failure too, and then I'd look to go long again there. So, but yeah, you might go short right here. We could make it green because you do have a close. Well, hang on, let me make this green, and we'll go back. I'll talk about it. Notice you get your close outside, two legs up to a new high, a little failed break higher, good bit away from the EMA. If you see all that and you want to be a little aggressive, that's the trade to take, because you may catch a major high of the day. Like down here, you caught a major low, you may catch a major high. This didn't turn out to be a major high. However, it did turn out to be a fairly nice trade. So, I mean, there's 4 or 5 points there, maybe 6 points, I don't know. And technically, there was a little tick up, so technically, you could have called that a failed second entry long. That wasn't really enough correction there. It just seemed like all still part of the same move to me, because that's so tight. So I really counted that as your first move and that as your second. But technically, that's not true. So if you see that little tick up there and you're saying, hey, this was where your failed second entry short was, that's the way I was looking at that, still as all as one move. And you could have looked at that one. I'm not sure if you'd have got trapped there or not. Does that one get enough? Your entry here would have been 95, and this went to, that would have been exactly 6 ticks again, just enough to get out. And that, and a lot of people would have still counted that as a failed second entry long. So, I mean, we could at least make that green. But what you have to look at, and what would have scared me out of that one, was first, it was just a little minor tick in a bigger move. And then secondly, there's not much room from there to there at all. And that's pretty scary, because it may go one tick and then you've had your break at a new low, and then we might be going higher again, because this could be a little correction and be the middle of the pattern, and this be your first leg, and then that would have put your next leg way up here and you get trapped there. So you want to have enough room, especially on a little move like this. So when it tried to go higher a third time, or really a second nice move, like I said, it got just enough to go short, and then this is a higher low after a break and a new low, and then a higher high and a higher low. Well, we're probably going to go back and at least test this high again, and we may test this one, and guess what? It takes off. And this one, it kind of gapped over there, and it never backed up, but you could have easily got filled on a limit order, even if you didn't get your buy stop in there in time. So keep that in mind. So you would have gotten in that one either way, even with a limit order. So if when it gaps like that, notice it never filled that little gap. There's no overlap between these two bars and this one, and there's generally, notice how if you study your bars, you'll see there's overlap on almost every bar. And occasionally you'll get a little gap when the market gets strong, but it tried to back up here and fill that gap. It couldn't, and it just went on. Generally they'll try to fill it, but if the pressure's too strong, too many people realized we were probably going higher here, and it just kept going. It never could back up. It had to come back after another break higher here. And we moved up. You really got some congestion. You're a little bit away from the EMA, and then it breaks higher. If you just had a nice bearish bar, I might have made it green, but notice you get a bearish bar, and then you get another inside bar, and it's, you're just kind of stacking up again. So I don't think it's worth trying to risk it. Wait on your true reversal, and notice it comes back. First entry, pushes through the EMA, pulls back to it. Failed second entry long, nice bearish bar. Just go short there. And originally I had my trend line a little further down, a little steeper. I ended up adjusting it a little bit afterwards. So that earlier that looked like it was right off the trend line. It's not necessarily, but I still think that's a safe trade with a failed second entry long, perfect little reversal pattern, another failed break higher. Everything had played out on this trend line over here, and we were back inside the overnight highs, and we tested it once, and we even tested it twice, then we came back and tested it a third time, and that's really like two legs back to the EMA. Double test of this level here once, twice, nice bearish bar, go short right there, and off it goes. And once it started lower, I'd look for it to come back down and test the lows, and that's exactly what it does. It goes a little lower, but like I said, we talked about earlier, it wasn't clearly bouncing at the same lows, but it was just bouncing in the same area within a point or two. And then you got a little reversal pattern here. You had a break way up here, and then at least two legs down, and it pushes up first entry, pushes up second entry. I would have liked to seen it go through the EMA, but this makes a higher double bottom. And so when this started trading back up, I like this trade just simply because this was the lows. It looked like we're bouncing off of them, and you got a higher double bottom than the original low. It does come back again here, but not a bullish enough bar. And then it comes up here and gets what looks like an overshoot, and it comes back. It's close to the trend line, but I'm going to wait on a little better entry. This looks like it's going sideways, and it really is. Then you finally break higher, and then you break lower, and there's also a new low there. So a first entry moved up, second entry, so it's a failed second entry short. It doesn't really matter about your signal bar, but even the next one's fairly bullish. I like going long there. Looking forward to go back to the other side now, and there it goes. And then guess what? You made a little lower low, failed second entry short. It's a repeat pattern. Go long right there. And then guess what? It moves up. Look, notice how it makes a new low. Failed second entry short, repeat pattern, go long again there. And this one got just enough again for you really to get out, and then it sells off. Takes you in the 2 o'clock hour, but you had three repeat patterns in a row basically there. Take all, the first two worked, the third one's probably going to work too. Take it. And notice how the next time it made another low, first entry short, second entry short, but it never breaks higher until way down here, and then it doesn't look the same. So it looked like it was going to make another repeat pattern, but it really didn't. It just kept going down. And by that time, you would have seen that you had something different going on. This really was just kind of going sideways there. You got 1, 2, 3, 4, 5, 6 bars kind of stacked up, and you can see it just, they're going sideways there. You might have probably had this up here. You would have ended up moving it down. And same thing here. So you got a little congestion area there. Notice a little breakout pullback short. That would have been and you got a double top up here, so that's a first entry. Second, that would have been a great failed second entry long, breakout pullback short, and again, you would have had an extra tick or two there maybe, but it wouldn't have been much more, and it bounced again. But this was after 2 o'clock, so I didn't mark any of it, but just to show you that. So yeah, almost 30 minutes worth today. A lot of, like I said, a lot of volume, and there's probably more trades than it felt like. You just had to be patient. You had to wait from just after the open till almost 10 till 9, and then you had to wait till uh, almost 10, 15 after 9, and then you had to wait again till almost 10 o'clock, and then you had to wait again till 10:20, almost till 11 here, 10:45, and then you had to wait till almost 11:30. So it was just one of those kind of days where you had to be real patient. And what happens to most people is they're constantly looking for an entry, and eventually they can't. Their patience is out. I got to find an entry. I missed this one. I missed that one. I got to find the entry, and they take the wrong one, and they have a loser, and they get shook up, and that starts you off on a negative foot. And then you say, okay, I gotta make that back, and then you force another trade. Next thing you know, you've lost 2 in a row, and then you're really down on yourself. If that happens to you, get up and walk away. You'd be surprised how many times you're having a bad morning or bad trading, and you get up and go walk around, go take you a break, get you a cup of coffee, whatever you like to have with your break. Take you a little snack break or whatever. Get you, if you're a sugar eater, I don't eat sugar. I'm a little bit of a health nut, but if you like sugar, go get you a donut or whatever, and get that sugar flowing, and come back, and you'd be surprised how much better, how much more clear everything will look. And I have to do that occasionally myself. I'm just start off, and for some reason I'm just not feeling it, not reading it right. Get up and go take a break, 10, 15 minutes, come back, and then suddenly everything clears up, and get that bad trade behind you or whatever. Or if you just can't read it, or you're just not feeling it or whatever. So there's a lot of psychology to this. You not only have to learn to do this, and you got to get your mind straight. I've talked about this to a couple of different people lately. One guy was just emailed me this morning, and he said that he was on a long winning streak, and he was starting to mess with his mind, and it'll do that. I hate to say it. I like being right, but when you get those big winning streaks, and they'll get bigger and bigger. They'll get bigger than you ever dreamed they'll get if you get good at this. And I can remember, I still do it occasionally. I'll get on a win streak, and I keep thinking, you start expecting, you got to have a loser soon, and you keep winning, and the more you win, the more that pressure builds, and eventually you'll just make a mistake and have a loser where you probably wouldn't have normally had that loser, and you probably could have really kept your streak going if you didn't let that psychological, monkey that sits up there on your shoulder and yaks at you in your brain. You'll hear these little words, your brain will talk to you and talk you into crazy things. So I know that sounds strange probably, but that's how it works. And if it's happened to you, you know exactly what I'm talking to. And if you've been trading any time, it's happened to you, because that's the way trading is. It's very, there's that psychological aspect to it where, for whatever reason, your brain will talk you out of perfectly good trades and right into perfectly bad trades. But that's normal, and you got to work through that and get past that. So just keep working on it. And I said I was done 5 minutes ago, and I'm still yakking. So, but that's all good stuff. Hopefully it was helpful to some of you. I'm going to wrap it up. We got a short week this week. Believe it or not, tomorrow will already be Wednesday. So it will be almost more than halfway through our trading after tomorrow. But I'm going to wrap it up today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.